Howdy there, folks. Welcome into tonight's video. We got a couple of videos to react to here on my reaction channel. First off, thank you everybody for joining. We're nearly 10,000 subscribers in at this point. Holy smokes, this ain't no joke. A couple of videos I want to react to. Okay, first one is Palantir reminds this engineer of Google in Microsoft. Okay, I want to react to that when I want to give my opinion on that video, and I want to explain something before we get into that video that I think is very, very important for everybody watching this. Okay, the other video we're going to react to here tonight, it's a 2-for-1 night. Okay, is inflation could be falling far faster than expected by Tom Lee. So I definitely want to hear his perspective on that and kind of give my opinion on that. Okay, just so you know, with the massive flash sale is going on right now for Become Master Stock Market that ends within like 24 hours from now, essentially. So if you want to take advantage of that sale for the Become Master Stock Market course before it ends, check out the pinned comment down there. If you're watching this more than 24 hours from now, the sale will already be over, unfortunately. So yeah, so anybody that gets to see this basically in the first day that this video is out, you should be able to take advantage of that sale. It's $700 off. Now, for any newer investors to the market, start with the fundamentals of stock market investing section first and go through all these videos first before you go through anything else. For my more experienced investors that maybe been in for at least a couple years or whatnot, basically just start right at the top and work through all these 35 videos here. And where you guys are going to get the most bang for your buck when it comes to this is this bonus part section. And I add to these videos every once in a while, essentially. When I have something like some really good material, I'll add into the bonus part section. Videos like this, how to outperform the stock market, how I value a growth stock, how I value a growth stock part 2, which is very important because a lot of people don't, I mean, to value a value stock's one thing. To value a growth stock's a whole different animal. How I find the next high growth stock. Some of these videos you're definitely gonna, let's just call it thoroughly enjoy. This one's channel checks, where I actually take you along on the road with me, doing channel checks for different companies. So yeah, these videos are absolutely very, very important. So yeah, anybody that takes advantage of that, hope you enjoy it. And let's get into this video, folks. I'd love to hear your guys' opinion on either of these videos here today.
That is looking at Palantir as an investment. And Carp says it perfectly with respect to if you're looking for something to invest in for the next week or 2 weeks, this isn't the company for you. This is going to be Microsoft in the 80s, right? This is my view. It's Microsoft in the 80s. It's Google in the 2000s. It's Amazon in the late 90s. It's going to change how...
So first thing I want to address here that I think is very important, because when people do comparisons with other companies, some people get very frustrated with those comparisons because they look at, let's say if you were to look at Microsoft today, right? Microsoft's a $2 trillion market cap. If you were to look at Amazon today, it's a 1.1 or $1.5 trillion market cap roughly, right? If you were to look at companies like that, right? It almost seems like, why are you even comparing a little tiny Palantir at a $14 billion market cap or whatever it is, 14, 15 billion, to those sorts of companies, right? But remember, you're not saying these companies are the equivalent of that now. They're that sort of company, what they were back in the day, right? Microsoft, back in the 80s, back in the 1980s, right? If you would talk to somebody about Microsoft, and you try to tell them that Microsoft was going to be a $10 billion market cap someday, they would have laughed you out of the building and said, you're a crazy person. You are literally a crazy person, okay? If you would have told them Microsoft would ever be a $100 billion company, no, people couldn't even have conceived something like that. Okay, 10 billion, they would have laughed at you and called you a joker. Okay, 100 billion, they would have been like, you literally are clueless. Okay, you have no clue. And then nowadays it's a multi-trillion-dollar market cap. You can't even conceive of this stuff back when, right? If you look at something like Amazon, right? If you went back to 1997, let's say we went back 25 years ago, and you told somebody Amazon's going to be a $10 billion market cap, they would have laughed at you. $100 billion? Come on, give me a break, right? Trillion plus? No way that's ever possible. And look what it ended up obviously becoming, okay? So that doesn't mean all these other, companies with big long-term growth stories are ever going to become 100 billion or trillion-dollar market caps or multi-trillion-dollar market caps, right? But it's important to just remember the reference point of there's going to be companies in the future that have 10 trillion plus dollar market caps on them, right? There's going to be a lot of companies in the future that have trillion-dollar market caps on it. A massive amount of companies that are going to have $100 billion plus market caps on in the future. And so these things are hard to conceive until time ticks on and then companies hit new net income levels that people never thought possible. If you look at some of these companies like the Microsofts, the Googles, Apples, companies like that, people never could have thought these sorts of net incomes were possible. until it happened, right? And then now people are like, oh my gosh, like, you know, Apple, I think, had something like $94 billion of net income last year. You know, there was a long, you know, for many, many years, people thought $94 billion of revenue wouldn't even be possible. Never mind net income. Give me a break. You got to be flipping my flapjacks. Ain't ever going to happen, right? And then it happens. So I think it's just important to kind of keep in mind when it kind of comes to this, right? So let's jump into this.
Analytics, data storage, data lakes, and time series data are all worked on. It's going to be an operating system for data. And that takes time. There's going to be ups and downs, just like Microsoft had ups and downs, just like Apple. And what you have to do, in my opinion, is stay the course. And you're looking for something.
Love what he just brought out there. There's going to be ups and downs. And every single company you respect, you know, nowadays it's in big tech, or for instance, every single one of those companies went through massive ups and downs in their companies and their stock prices. You know, if we pull up the my big tech watch list, right, and this is like the most respected companies pretty much in the world nowadays, right? If we were to pull this up and look at all these different companies, every single one of these companies here on my big tech watch list, every single one of those companies has gone through some dramatic downside when it came to their stock prices, like some vicious, like, you know, 50%, 60%, 70%, 80%, even maybe 90% downward moves for their stock prices. They went through some rough years where their revenue wasn't quite clicking, their net income wasn't quite clicking. There was even some times where, you know, these business models were thought of as they were just going to be fads. Like it was just going to be here tomorrow, today, gone tomorrow type thing, right? There was many times many of these businesses thought they were just going to forever be, call it cash burning companies. You know, it's important to remember those sorts of things as time kind of ticks on with these sorts of companies, okay?
That can have exponential growth over the course of 10, 20 years. This is a great company. If you're looking for something to trade, this is not the company, right? I think it's going to be very volatile. It's going to go up one day, down the next. If you're going to day trade it, that's awesome. If you're going to swing trade it, I think you're going to be in a world of pain. It will lose in the short term. Is it overvalued right now? I think it is overvalued right now. I think it's worth about $6 to $7 a share. But I know
currently Palantir is about $7 a share. I think this video was from maybe a week or two ago. And Palantir stock has fallen here recently. Let's go ahead and pull up Palantir 740 here today. So just for reference, as I'm recording this video here today. So basically, it's where it's valued now, where this gentleman thinks it should be valued in the short term. Okay.
Future value for if you were evaluating it on this day, time, and purpose, and the revenue streams that they have. If you're evaluating it from where it's going to be 10, 20 years from now, it's dirt cheap. And so you have to think, you know, how long of a wavelength do you want? What's your risk tolerance? And really how long do you want to stick around? And if you're going to listen to a lot of the people that are trying to swing trade it, it'll lead you to paper hand. And that's okay. I mean, that's okay for some people. But that's not why
it's not okay for my people. Let me be clear about that. It's not okay for you guys.
Into the company. I got into the company before the memes started coming out. I got into the company because I've worked with them. I've gotten the company because it's a different company that I've ever worked with. And I think that is what
that's important what he just said there. And also, like, I would never consider Palantir to be in the meme group. You know, it's a lower price stock. It's popular in the retail community. But I think there's a massive difference between a company like a Palantir that's got a crazy amount of growth over the next 5 to 10 years versus, you know, no disrespect to those companies, but the AMCs and the GameStops and the Bed Bath & Beyonds is, you know, it's so disrespectful to put a Palantir into that sort of category. Those companies, you know, no one's going to know if they're even going to be around in 5 or 10 years. Palantir is a whole different situation with an unbelievable balance sheet and obviously just ridiculous growth for the next 5 or 10 years, if not 20 years.
I listened to Karp and I listened to Sham in these calls, these marketing calls, conference calls, and I laugh because everyone else is going to freak out. I listen to it and I'm like, you know, Karp's getting after it again, but I love that passion. That's passion that hasn't been seen since Jobs. That's like, you know, it's those sorts of CEOs that have that passion that don't give an F about the conference call. They care about the product and getting the product in front of the right people and taking their time with it. And it's not going to be all salesmanship and showmanship because that leads to quarter growth. Nobody cares about that in the long run. In the short run, people care about, okay, get my numbers, 80% year over year. I get that, and that makes me happy. What I care about more is the focus on the product and making sure that people are excited about the product, love the product, use the product, come back for more from the product, and aren't pumping up numbers because they have massive sales teams.
See, the great thing is this is really big for everybody watching this video to understand about Palantir outside of just their business model and all the growth the company has in future years and things like that. Think about the shareholder base they're starting to attract. They're starting to attract gentlemen like this. They're starting to attract people like myself that I've just started buying in this stock very recently, right? They're starting to attract folks that are going to be in this for years to go in the future. And we're looking at it as we're going to build these positions out and, see where this company goes over the next 3, 5, 7, 10 years, right? And there's a very attractive shareholder base they're starting to build out, because many shareholder bases, the way they build out over time is very kind of up and down, right? Palantir is somewhat of a new public company, in the past, 2 years or so, they went public, right? And as a fairly new public company, they've had trouble kind of building out their original shareholder base, that first shareholder base, right? That's going on, and they're attracting a lot of these people, especially because the stock's under $10 a share. And so therefore, a lot of us that think this stock's a phenomenal long-term value, look at the value proposition, and the risk reward's just there for us now at this point in time, where it's like, okay, we're ready to get in this baby. And that makes a very attractive shareholder base. So if Palantir is going to get to a moment in the future where these quarterly numbers don't matter so much for the longs, like they're not going to sell out. You get some of the weak hands in it in the first, let's call it year or two that a company goes public. But the type of shareholders they're going to build out in this company now and over the next couple of years are not going to be that sort of get scared out easily. And even if a quarter misses or something like that, be like, I have certain stocks like that I just don't care what the quarterly numbers are. All I care about is the yearly numbers and that the company's going where I think it's going. There's several companies that come to mind that fit that criteria, right? One would be Tesla. I don't care if Tesla misses or beats their next quarterly report. I'm not selling my last 500 shares of Tesla because they beat or they missed or actually I have a lot more than 500 shares because I just did the split. I might have 1,500 shares or whatever now. But I'm not going to magically sell the rest of my shares or buy some shares based upon the quarterly numbers or something like that, right? And there's several other stocks I hold that just, they miss, they beat, who cares? All I care about is the yearly numbers and that over time they're going to where the company is going. And, Palantir is definitely building up that sort of shareholder base, which I think is pretty darn exciting, because for the short-term folks, there's a lot better opportunities out there in stocks to play than Palantir, right? If you're into the short-term stuff, you might be interested in playing things like oil and gas stocks right now, because that's where a lot of volatility is, right? And traders are always looking for that volatility side, right? So I just think that's important to remember, what type of shareholder base this company's actually building out. And they're building out the type of shareholder base that me as a shareholder, somebody that's buying this stock right now, that I'm really going to appreciate over the coming years. Let's just put it that way, right? Because they're going to hold their shares, and then essentially, if you're going to put any buying pressure on this stock, and there's less and less shares taken off the market, right? Because folks that are longs just aren't willing to sell. Guess what ends up having to happen? The price goes up and up and up.
Getting the numbers because it's a great product. And then when the product is great, they have the opportunity to upsell it, market it, do great, and build a culture around it, where I'm seeing hope in a great company that's building an operating system that I don't think people will fully understand yet. Just like people didn't understand Microsoft, people didn't understand the internet. I think that this honestly will become a new space. Will it be a potentially more minute version of Microsoft? I agree. Yes, Microsoft has a little bit more usability for a lot of people.
People don't ever understand anything until it's really so huge that it's right in their face. When Facebook went public, people didn't even understand Facebook. Think about that for a moment. Now we look back and it's like, how could you not understand that business model? No one on Wall Street understood Facebook when that company went public. I watched the whole thing play out, and the IPO was a disaster. The stock was down 50% plus 4 months, 5 months after the IPO. No one wanted to buy that stock. No one got it. No one really understood it. And, for a simple company like that, no one understood Amazon Web Services until the past few years, when it was already this huge thing that was this huge business for Amazon, right? And they saw Amazon Web Services commercials all over TV, and maybe their company started using it. So, that's something to keep in mind. Like, no one was talking about Amazon Web Services before like 3 or 4 years ago, unless you were super into the nitty gritty. Everybody, even if they thought about Amazon stock, go back to 4 or 5 years ago, was thinking about it from the retail side, the e-commerce side. And then they really started to understand AWS over the last few years. And, obviously that stock went where that stock went, right? And so these are just kind of some factors to keep in mind here.
And same with iOS. But for companies like a Boeing, an Airbus, a GM, a SpaceX, a Tesla that has a lot of this data-driven work that they do on a day-to-day basis, Palantir is needed. Microsoft is an afterthought. Microsoft is used as an Excel data gathering tool to make graphics. You want to make graphics and make them with ease, with data that's coming directly from your shop floor and within the next 3 to 5 minutes, and not having to data entry your data because you're not connected up to some sort of data lake or something like that. With where the world is heading, with everything being on the internet and the ITOT of the world, or IoT, depending on who you're asking, everything's going to be tracked. You can track your heartbeats, all those things. All that can tie into, on a seamless basis, a Foundry operating system and be organized in any sort of way that you want. And what I don't think people fully recognize is the scale of that. You're talking about the operating system for the future. And you look at some of these promotional materials for the government and stuff like that, it's literally Skynet, right? It's pretty cool. Constellation's really cool. Apollo and Gotham are cool. And I don't think people fully are grasping it. I think that they're just listening to headlines, and then they get fanatical about headlines and people. That's
true. By the way, if that gentleman that is talking right there, if you see this video, say hello to us. I'd appreciate it. And, just to kind of finalize my thoughts here about Palantir, it's just interesting how many engineers specifically are actually into buying this stock and speaking about this stock. And, higher level folks, I would just call it that, work for different companies that are buying this stock are very interested in it. And I haven't seen the quality of shareholders buying a stock like this since Tesla. And that's one other thing that I don't want to say convinced me, because there's so many other things, but that's just kind of the last, I guess you can say, push for me with this stock. When I see as many high level thinkers getting into a stock also, it is very, very intriguing, because you don't see that too often. And I also watched that play out in AMD. I was not an AMD bull, and I didn't fully get what was going on with AMD. And there was a lot of high-level thinkers in AMD back in the day. There still is, by the way, in AMD. It was really prevalent back when that stock was a single-digit stock or like a $10 stock, things like that. And it was interesting how many high-level people were in that stock. And I should have seen something there when I was like, okay, if you have this many high-level thinkers that are spending their time and money on this stock, it's worth spending some more time on it to go around and kind of even if you don't get it the first time or the 10th time, spend some more time and more time. Because if there's that many people convinced that this is a huge opportunity, there might be something there that's at least worth looking into, right? And then eventually you can get your head maybe wrapped around to a point where it's like, okay, I think there's something here. I think back to NVIDIA. I think back to AMD. And those stocks, from the time they got on my radar, those stocks, 50x, 100x from the time they got on my radar. And I didn't fully understand it but I think I was like, what if I had just spent another, day or two thinking about those ones, re-looking into it from all different angles. Maybe that would have been the time it clicked, right? And I would be like, oh, dang, I get it now. This is why AMD is going to be huge in the future. This is why NVIDIA is going to be huge in the future. What if I just spent a little more time? I think about that sometimes, because I think maybe I thought about those once or twice, and then And then I think I gave up. And that just kind of disappoints me because I'm like, I wish I would have gone through it a few more times. Because when you're talking about in the stock market, when you're talking about the sorts of opportunities to 10x your money, 50x your money, 30x your money, 100x your money, whatever, those opportunities come along so few and far between that when you get those opportunities, gosh, you better take advantage of those opportunities because there aren't, there's going to be a certain amount of stocks that are always that 10x opportunity, 5x, 15x, 30x, 50x, 100x, right? But it's not like it's most stocks in the stock market. So when you have one of those rare opportunities kind of in front of you, it's worth spending time again and again and again looking at it. And if it's not there and you've really just gone all out on the stock a ton of different times, you came back to it a few weeks later and a few months later and kept coming back and you couldn't find it, okay. But you got to make sure you've given yourself like every ounce of energy toward that to make sure it's not that sort of opportunity. And the more opportunity you should give the more high level people you see around it is the more you should be like, okay, let me just relook at this again. Okay, let me look at it from a different angle and try to understand it, right? And if you've really given it your all and it's not there and you missed it, then that's fair play. You can accept that, right? It's kind of like, in a sport, if you give it your all and you lose, it's okay. Like you can get over it, right? But if you lose at something you care about and you think you might have been able to give it a little more effort, that's where it really hurts, man. That's where it really, really hurts, okay? So that covers Palantir. Next one up here, Tom Lee says inflation could be falling, far faster than expected. So let's hear what he has to say and let me react to this one.
September, but there could be a positive surprise in store. So says CNBC contributor Tom Lee of Fundstrat Global Advisors with me here at Post 9. You're always trying to find the positive within the negative. Some say it's getting harder to do that.
Yeah, I mean, the last few weeks, it's been hard to find anyone that is positive, right? I think they've all been gone into hibernation, early winter.
There are a few people, here and there.
Yeah.
But what allows you to remain as such?
Well, I think that it still comes down to our belief that a lot of the pessimism about inflation is anchoring negative sentiment. We know that this is also sort of part of the Fed's default view, and we're coming into September, which is a seasonally tough month. But in the past week, we've gotten some data that I think really shows inflation could be falling far faster than expected. One, gasoline. Now, as we close out the month, it might subtract 0.6. The ISM prices collapsed for the month of August, and that really points to potentially PPI going to almost 0% in a few months. And then I think the third thing that's pretty encouraging is if you look at sort of the composition of CPI.
Let me be clear. No one has that baked into their numbers right now, even remotely close. So if we got even remotely close to a zero, like for PPI, that would be insane.
42% of the basket is actually now in outright deflation. So I would say I think there's still positive surprise coming, and it's the fact that inflation could cool a lot faster. And history shows once it starts breaking, it falls very quickly.
What if the surprise is...
Yeah, and inflation should have already been falling. Let me explain this to folks, okay? Inflation, the numbers should have already peaked many, many months ago. The reason they did not peak is because Russia invaded Ukraine, okay? And what that did to energy prices screwed up everything. Oil went to the moon, natural gas went to the moon, anything energy related went to the moon, right? It caused transportation to get much more expensive, which caused everything. If you're going to transport any products, I don't care if you're talking about a gallon of milk or I'm talking about a flat screen TV. It caused everything to be more expensive to transport, okay? And so we got screwed over. Like inflation should have been falling a long time ago, but the invasion screwed up everything, and that made the inflation numbers go, to ridiculous numbers. Now, if you have, things go so out of whack that way, it's going to flip the other side in a much more dramatic way, essentially. And that's exactly what we're going to likely see play out now. And so it's just important to kind of remember we went way too far to the upside because of a freak situation. And now, the year-over-year comps are near impossible for inflation now at this point in time. Oh, my gosh, okay?
That the Fed is more resolute than people want to believe.
I was calling out inflation way, in 2021 before this was on anybody's radar. And I've been the guy that, I just started saying this recently, like inflation's old news. Now, no one's going to be even talking about inflation 6 months from now. It's going to be old news. I think inflation is going to come down in a massive way over the coming months, unless we get some sort of freak situation, like a Russia-Ukraine again. But those events come very few and far between. And we had one of those, and it causes things to get screwed up in a bad way. And it happened, man. But you can't keep counting on those freak situations to happen again and again and again. Again, eventually it gets unrealistic, and it's like we had a freak amount of things all hit the market at the same exact time.
That there's a bit of denial going on as to the Fed doing what Jay Powell suggests they will, and sticking with it, and keeping rates higher for longer, and keeping rates higher for a lot longer, and a lot higher than people think.
I'd say that that's the consensus view, and I think it's appropriate. The bond market still is not completely convinced, as you know, because the bond market is pricing Fed funds peaking next year and then some cuts coming. And if you look at the inflation swaps market, for the next 2 months, the inflation swaps market is forecasting deflation. Mm-hmm. So outright prices falling. So I think that it's possible in the next couple months, the idea that inflation's sticky and the Fed has to therefore stay tough is going to be modified by the idea that inflation could be coming down very quickly.
So what do I do with the other risks? Because September seems fraught with them. We get a great reminder today, an awful reminder, but a big reminder of that with the pipeline. I've got the potential for earnings revisions. I have the Fed meeting. I've got the dollar, which remains especially strong. I've got oil still hanging around 100 with the propensity perhaps of going higher. None of that matters?
No, they all matter. But I think markets need some perspective. In June, people talked about gasoline at going to $6 or $7 because people forecast oil going to 180. Now we're in September and oil's at 86.
Thank goodness that never happened. Oh, my goodness.
About Europe, they're still there, but as you know, just a few months ago, people were forecasting much greater shortages, and it looks like Europe's made some progress filling up. And I would say just from a market history, I know seasonality is tough, but we already know investor positioning is actually really light and sentiment's negative. So I think as technicals improve, the dollar doesn't have to keep going up. And if interest rates break, I think a lot of these could add up to stocks rallying pretty hard.
What multiple is justified, do you think, for the market?
Before we get into that question, which is a good question, by the way, it's investors have gotten their minds very screwed up in the market recently, and specifically Wall Street. And, they always think whatever they're seeing in front of themselves is going to continue on, right? We had a freakish amount of negative things all thrown at the market over the last, it's called 9 to 11 months, okay? And now investors are convinced that because they keep seeing all these negative things that happen all simultaneously, that's going to continue on. That will not continue on. That is not how it goes, okay? No different than, if everything is just going freakishly well and like everything that could possibly be going good is going good, right? For 9 to 11 months straight in the market. That's not going to continue on, right? And eventually something's going to break and it's going to start bringing down the market, right? And so I think this is an important factor to remember, because people have gotten far too negative in this market now at this point in time, because they've seen negative stuff, and so they just assume like negative stuff's going to keep happening.
I think the best way to still judge the PE is to look at the 10-year. And the 10-year, if it's at 3.2, is still a roughly 35 PE market. I don't know why we would say the S&P has to go to 15 times. So again, I think if the 10-year drifts back down to 2.7, you're talking a 40 PE for the 10-year. I'm not sure why the S&P PE has to go to 15 times. Okay.
That's a great point. Because at the end of the day, people think about like, where are you going to put your money? Where are you going to put your money, right? And so, in regards to what Tom Lee just said there, I'm mostly on board. Inflation is going to continue to come down in future months, unless we get some other freakish thing out of nowhere, that no one else saw coming. At some point in time, those just become unrealistic. We already had like 7 of those in like 11-month span. It's like eventually, you just kind of run out of those bad things that keep happening in the market, and eventually things it's not the end of the world, and eventually something goes right and people are like, whoa, something's actually going right for once. What do you know? Okay, so that's kind of what happens there. And I think we set up for a pretty good 2023. Let's just put it that way, especially if we continue to see any weakness over the next few months. That's why I'm buying considerably, now and over the next 6 months in this market. Any major dips, I'm a buyer, because I think we're setting up really, really nice. And there's so many stocks that have just been absolutely obliterated that are at valuations that I just don't see them being out in future years. Let's just put it that way. So yeah, I hope you guys enjoyed this video. As always, let me know what your opinion is in the comment section. I'd love to hear from you guys as always. And once again, that Become a Master Stock Market sale, if you want to get that before the flash sale ends, check out the pinned comment down there. If you're watching this in the future, the deal probably is already over. So I apologize. Maybe we'll have another one of those sales at some point in 2023, for this course. But yeah, so much love as always, guys. Thanks for being subscribed and have a great day.